Alasdair, Wall Street is expecting a September rate cut due to a disappointing jobs data report. Do you think the Fed will grant them their wish? And what effect will it have on gold and silver?
That is a very difficult question to answer because the issue has become so politicized with Donald Trump leaning on Jay Powell to cut rates. Now, the inflation rate in the United States is way above the 2% level, which is, if you like, the target set by the Fed. Now, on that basis, he shouldn't cut rates. But against that, I think Trump would probably claim that the jobless figures that we saw last week were worse than expected. And I'm sure he will argue that current rates are basically killing the US economy. So you can see that I think that the FOMC has a very difficult decision. It's going to be walking a very narrow line. It can fall off one way or the other. So we don't really know. I think if I was in Jay Powell's position, I think I would have to take account of the politics as well as the economic and inflation situation. So I would be tempted to have a quarter-point cut now, in other words, in September, and leave it at that for the moment. And maybe in the statement say that, in the FOMC statement, say that it is premature to think of further interest rate cuts, given the rate of inflation holding above the Fed's target of 2%. And I think that's probably what I would do if I was him. As far as what the markets will do on this, is a good question. Off camera, we were talking about how things are so quiet in August. And investment managers will be returning to their desks in September. And they will be considering the investment outlook a lot more seriously than they have maybe since May. That's, you sell and go away in May. In other words, what it means is that markets don't necessarily fall, but you don't want to have any open positions. You don't want to have to take any decisions while you're on holiday with the kids on the beach, whatever. So I think that they will begin to seriously look at the outlook for markets in September when they return from their holidays. So that, I think, coupled with the interest rate policy from the Fed, I think could have quite a dramatic effect on the markets. I mean, we've all understood that our world is going to hell in a handcart. We all know that government finances are in a horrible mess. And really, when we consider what's going on in that sense, then we should actually be selling equities. We should perhaps be selling the dollar if we look at the debt trap that the dollar is in. And on that basis, we should be getting out of financial assets and maybe getting into gold. Now, whether that decision is taken at around about the time of the September FOMC meeting or not remains to be seen. But I can see that there are a number of cross currents which look like probably pushing gold and silver significantly higher. And in any event, this is something which the technical analysts looking at the chart, I think, would suspect will happen anyway.
Yeah, it's interesting. Wall Street, I mean, look, it seems to me at the moment the world is between a rock and a hard place. We all know that if you have rate cuts, it leads to higher levels of inflation. It incentivizes spending, which leads to more borrowing, more debt, which leads to higher levels of inflation, which is exactly what we don't need at the moment.
Yeah.
So, no, I think Alasdair's comments are very valid and scary place to be at the moment. I'd hate to be making the decision.
I'm glad Alasdair's got that question.